This morning we're talking about the Johns Lyng Group, JLG on the ASX, your silver lining playbook. So what are we talking about exactly? Here is the John Lyng chart, or a small part of it. You will see that the company enjoyed very significant success, brushed aside COVID and rose to all-time highs in 2022. It has fallen away since then, and then mid last year we had a cliff top event. What you will be picking up if you watch these videos frequently is that one of the themes of my analysis is the opportunity presented by these cliff drop events, and what this video is about in part is this particular cliff drop event as an example of how you should respond. Once again, I have taken the trouble of having ChatGPT prepare a 10-minute script, and the reason that I am including these ChatGPT scripts is, as you'll see, I'm not following the script, but it's meant to be an additional element of value for the people who watch these videos in terms of providing the kind of analysis that you might expect from the cookie cutter investment advice industry. What you will see in the ChatGPT events is that it can tell you what happened in the past, but it is not going to be so good at telling you what you might expect in the future, even though it is responding to prompts that I have provided to it. So here is Johns Lyng. Now, the second theme that you might pick up in these videos overall is my recommendation that in choosing stocks to invest in on the ASX, a central concern for investors should be the degree to which that company has found a way to insert itself into the North American economy in general, but the United States economy specifically. This is about two things. First, it's about the long-term period of growth that I expect the North American economy to enjoy over the next couple of decades. The second thing in the short term, obviously, is to insulate the company from the Trump-led chaos that we're watching unfold at the moment. And what you see here is that Johns Lyng is a company which profits from disaster. And when you look at the news, the obvious question is, to what extent is Johns Lyng USA going to profit from disasters in the United States? So the focus of this particular video is the recent cliff drop event in the price of Johns Lyng. What we're talking about in part is what drives this. ChatGPT thinks it's an emotional reaction. My analysis, it is what I refer to as the programmed stupidity of the AI-driven investment bots. Now here are the company's fundamentals, and you can see that the company is a real company. It's a $1 billion company. It has a PE ratio which is not at all high. It has no significant debt issue. It's not a dividend stock, but it does pay a regular dividend. And what I want you to focus on is these three charts down here. Here's the revenue chart, which looks very healthy except for a minor pullback last year. Here's the operating margin chart, which again looks very healthy, and here's the net profit after abnormals chart, again very healthy. So what you might be asking yourself is, what would I expect to see in the price action chart of a company with these fundamentals? Here is a bit more of the ChatGPT take, and the idea behind this form of presentation is that if you're interested in comparing the analysis that I'm providing with this kind of analysis that is based on the collective commentary that ChatGPT has reference to, you can pause the video and read this script in greater detail. So this is what this focus on Johns Lyng Group is all about. This is a national map of the 27 separate billion-dollar weather and climate disasters that occurred in the United States in 2024. This is before the California wildfires, for example. This is all just last year. So the other theme that we're looking at in this video is the tendency to market overreaction. ChatGPT talks about market psychology, but what we're trying to establish is a reliable technical basis for analysis of this kind of cliff drop event, as I call them, and an understanding of whether or not you can consistently profit from them. So here is the cliff drop event in the James Lyng price chart. And what you see here is the price action line, the 20-day simple moving average, the 50-day simple moving average, the 100-day simple moving average, and the 200-day simple moving average. What I am suggesting is that this is not at all uncommon in the kind of technical setup that you're going to see in companies from time to time. Now, the other theme, obviously, is on the company itself, and what people who watch these videos will realise is that a dominant theme of my advice about companies listed on the ASX is that in assessing their potential for future growth and profit, a fundamental question should be the extent to which that company has managed to insert itself directly into the American economy, both to take advantage of the long-term growth that I expect, but also to avoid the kind of chaos that we're seeing as a result of the return of Donald Trump. Now, this is another anonymous market drop, well, cliff drop event. You'll see there's the price action line, 20-day, 50-day, 100-day and 200-day simple moving average. And this is just something that I wanted to emphasize that ChatGPT got right. And here is the longer term chart of the company that I just showed you. This is Medibank Private. This is the cliff drop event that occurred after the data breach in late 2022. And as you can see, companies recover from cliff drop events. So what's the bigger picture for Johns Lyng in 2025? Well, this is ChatGPT's take on it. And this is the analysis that I'm providing here. What I am suggesting is, and what I am moving towards, is a development of a series of buy points. So in terms of the MACD, here is the buy point here. Now at this point the stock has simply dropped and dropped and dropped. Here is an indication that the direction of the price action line is about to change. That's the first buy point. Here's the second buy point, when the price action line cuts vertically through the 20-day simple moving average. Third buy point, when the price cuts through the 50-day moving average. The fourth buy point, when the price action line cuts through the 100-day moving average. And what we see here is the price action line moving up to the last buy point, when the price action line cuts through the 200-day moving average. So James Ling is a company that profits from disaster. But of course there's only one kind of disaster that won't turn a profit for a company like the James Ling Group. Don't want to get too heavy at this time of the morning, but that sort of disaster is something that we all have to keep in the back of our minds, but the apparent disaster which has already arrived in the United States is the return of Donald Trump. And the point of this focus on James Ling Group is that this is an extract from the company's most recent reporting. James Ling is poised to profit enormously from its positioning in the United States market and the United States economy. That's it. One thing I wanted to do before I go was to draw your attention to my geopolitical analyst of choice, Peter Zion. Zion on Geopolitics, that's his website, and this is his YouTube channel. I would recommend that if you're not watching Zion already, he is certainly worth 5 minutes every day. That's it for this video, and here's the disclaimer.